I think that it's safe. It's relatively safe between now and mid-December. And after mid-December, especially if we have a new high in gold, I think you could say a roaring success in the market, similar to 2015, 2016. I view gold and silver, physical gold and silver, as an insurance policy. And I know people disagree with me. No, it's money. I don't want to make that kind of argument. I sleep better at night knowing that on my left hand, I can put some gold and silver.
Bob Moriarty is a well-known individual with a background as a Marine, naval aviator, and financial author. In this video, Bob highlights the undervaluation of gold stocks despite gold's resilience, and he views holding gold and silver as an insurance policy. Gold itself has been a better performer than gold miner stocks so far this year, although the yellow metal hasn't been able to break decisively above $2,000 an ounce. Gold stocks have yet to glitter in 2023 strictly. The NYSE Arca Gold Miners Index initially surged after the Silicon Valley Bank or regional banks incident, but ultimately experienced a failed rally and hit new lows in early October. According to Bob, the critical factor influencing the market is the price, not a genuine shortage of gold and silver. Despite record amounts of silver flowing into industrial applications, investor demand remains a critical missing piece of the market. Metals Focus noted that physical demand from the investment sector is expected to fall 21% to 263 million ounces, representing a three-year low. Meanwhile, Bob is skeptical about CBCDs, arguing they concentrate power in the government and historically lead to social unrest. By the end of 2023, over 130 central banks, representing 98% of global GDP, will have initiated programs to develop central bank digital currencies. CBDCs would give the central bank and the government more power and control over the money supply and the payment system, which could undermine the autonomy and independence of the users and the market participants. Now we present the clips of Bob Moriarty's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
They're not in short supply. Okay, price determines demand in all cases. If you want someone to supply more corn, pay them more money. Gold and silver have never been in shortage. I mean, the funny thing is, and there's so many lies told about it, and I'm really shocked that the financial newsletter writers get so many things wrong. There have been 50 billion ounces of silver produced, and much of it is still above ground. I mean, we recycle aluminum tin cans, for crying out loud. You think they don't recycle silver? Of course they do. We have an 80-year supply of gold, okay? We could shut every mine in the world down for 80 years, and we've got an 80-year supply in storage, okay? So there's no shortage. It's all an issue of what's the price. We had a disastrous market in gold stocks since March, which is not rational at all. And that's what you were talking about before, because gold has held up very well. Gold is 3% below the highest it's ever been. And the stocks are selling for pennies. And the one thing that I'll say is, one, I think it's safe to invest between now and March. Two, you need to take into account tax loss silly season. But I think that it's relatively safe between now and mid-December. And after mid-December, especially if we have a new high in gold, I think you could say a roaring success in the market, similar to 2015, 2016. I'm a contrarian. And everything happens in equal cycles. So you have a really crappy cycle, which everybody hates, and they hate me, and they hate you, and anybody talking about gold. And then you have a booming cycle, and all of a sudden you're handsome, and I'm interesting to listen to. But it's a cycle. It goes up and it goes down, and it's no big deal. And you would never notice gold stocks are going up unless they had gone down first. But I think we're going to go into a good period here shortly. History books are filled with the broken dreams of the oligarchs who think they run the world. Central bank digital currencies don't make a lick of sense because all they do is transfer total power to the government. And that's what they make barricades and revolutions for. It's happened 100 times before in history, and it's going to happen again. So in the unlikely event that they would succeed with central bank digital currencies, you've gone into never land, where the idiots in Washington and the idiots in Brussels have just gone off on one more tangent. Now, we know that electric vehicles don't make financial sense. We know that wind turbines don't make financial sense. We know that climate change was made up and they've been lying ever since. We know that CO2 at 0.4%, 0.04% is actually a very beneficial gas. 100% of what we're being told now is a lie. So if you want to find out what the truth is, first of all, you've got to stand up and you got to do some research on your own. And second of all, you have to listen to the mainstream media and then realize that exactly the opposite is true.
Bob Moriarty conveys his perplexity about the unpredictable market dynamics, pointing to unexpected oil, gold, and major indices trends. A higher gold price over time directly correlates to the long-term decline in U.S. dollar purchasing power. Any apparent effects from geopolitical issues are temporary at best, and there is no reason to expect them to have any measurable or lasting effect on the gold price unless the U.S. dollar is affected negatively. Reports of higher demand from oil service companies and increased outlooks for capital expenditures by producers are clear signs of more supply to come. Bob Moriarty noted no direct market correlation, but highlighted potential spikes in oil and gold in the event of an Arab oil embargo. Shock geopolitical events inevitably trigger market volatility. Commodity prices, especially gold and oil, typically jump, as do safe haven currencies and bond prices, notably those in developed economies with short maturities. But equity markets often fall. Let's get back to the interview.
I've been sitting here wondering, this is the most absurd market in every way. Oil shot up and it seemed to make sense because of the chaos in the Middle East. And gold didn't do anything. And then gold went up and then the stock market went down, and it literally touched a very important point where I thought it would start a market crash. And exactly the opposite happened. Now, do you know where the NASDAQ and the S&P and the Dow are compared to where they were in late July? We're at exactly the same point, okay? You know, I was really proud of myself because I came out with two predictions, one saying the markets had topped and the other saying that we were going to have a massive crash. And I thought, well, you know, I was right 1 out of 2. If the market goes up for another day or two, I'm going to look stupid twice. But we're in an area where I don't think there's any logic. I don't think there's any connection on anything. Okay, that's true of gold. It's true of the gold stocks. It's true of the stock market. It's true of oil. And frankly, I can't guess where it's going to go from here, but some things, the last time we talked about that $600 billion in increase in debt in 1 month. And I'll just say, yes, I was wrong. However, you just cannot tolerate a $7.2 trillion increase in debt in 1 year without blowing the financial system sky high. And I remain convinced the financial system is going to blow sky high. I'm just not going to put a date and time on it anymore. I don't see any direct correlation. However, if there was an Arab oil embargo, or if Israel bombed Iran, which is what they really want to do, you would obviously see a spike in oil, and you would see a spike in gold at the same time. One of the things that I want you to do is I want you to take a screen print of the XAU over gold. And I'll tell you what you're going to see. It declined to new lows exactly the same way it did 13 months ago. And 13 months ago, I said that gold shares are going to go up into March, and that's exactly what happened. Now, I didn't know what was going to happen after March, and in fact, from March until now has been a total disaster. And I'm pretty sure the last time we did an interview, I said gold stocks look good between now and March. John Rubino has done an excellent piece talking about why gold stocks have not gone up. And he said what it's going to take a new high in gold for the market to wake up. And I think we're going to see that shortly. And again, I'll crawl out on a limb and you can cut it off behind me. We could see that in the next week or two. So we're at a very precarious point in history, and I'm not sure what's going to go on from here, but it's exceptionally dangerous. And for those who have listened to me, and when I said you've got to prepare, I think they're going to see the wisdom in preparing.
The expectations for expanded geopolitical risk and the reality of actual war were added to the inflation expectations already being touted as reasons to expect a gold price increase in multiples of thousands, $3,000, $4,000, $10,000, and $25,000. The undervaluation of gold stocks and Moriarty's skepticism towards CBDCs raise critical questions about the resilience of our financial systems. How do you perceive the evolving dynamics between geopolitical events, market concerns, and the valuation of precious metals? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.